Banks are not competing to build your wealth. They're competing to monetize your behavior. Your paycheck is data. Your debt is revenue. Your spending is predictable. Your fear is profitable. This is not a conspiracy. It is a business model. And once you see it, you cannot unsee it. Most people believe the system is broken. It is not broken. It is functioning exactly as designed. You were taught to get good grades. You were taught to get a stable job. You were taught to save in a bank. You were taught to build credit. You were taught to take manageable debt. You were taught to invest for retirement at 6. But you were not taught how money is created. You were not taught how inflation reduces purchasing power. You were not taught how banks profit from deposits. You were not taught how debt fuels economic growth. Financial literacy was never the priority, because informed people are harder to monetize. Now let's talk about debt. You think debt is a tool you control? In reality, debt controls you. Credit cards are designed to generate interest. Mortgages secure decades of payments. Student loans monetize future income. The system does not profit from your freedom. It profits from your obligation. It benefits when you carry balances. It benefits when you refinance. It benefits when you extend terms. It benefits when you miss payments. It benefits when you pay interest. You are not simply borrowing money. You are committing future time. Most people think banks lend existing deposits. Modern banking creates money through lending. Loans generate new digital currency. Your signature activates that creation. The bank records an asset. You record a liability. They gain yield. You gain repayment responsibility. When interest rates rise, institutions adjust. Borrowers absorb the pressure. Inflation is not random chaos. It is a structural outcome. When money supply grows too quickly, value declines. Purchasing power slowly erodes. Cash holders feel it first. Fixed wage earners feel it next. Asset owners often benefit. Credit controllers adapt faster. Inflation transfers wealth quietly. It shifts value from savers to asset holders. It shifts leverage from workers to owners. The change feels gradual. That is why it goes unnoticed. Now consider your daily transactions. Every purchase creates a record. That record becomes data. Data becomes analysis. Analysis becomes monetization. Your habits influence your credit score. Your patterns affect loan approvals. Your history shapes your interest rates. Your behavior guides targeted advertising. You believe you are simply paying. The system is constantly profiling. Convenience reduces friction. Reduced friction increases spending. Spending increases dependency. Dependency strengthens the model. The environment feels comfortable. Comfort prevents resistance. Subscriptions normalize recurring payments. Lifestyle upgrades expand expenses. Expenses increase reliance on income. Reliance limits flexibility. Needing the paycheck becomes the trap. The system extracts from the undisciplined. It rewards strategic awareness. It favors ownership over consumption. It favors assets over liabilities. You cannot exit the system entirely, but you can change your role within it. Shift from constant borrowing toward ownership. Shift from reactive spending toward intentional control. Measure wealth by autonomy, not income. Understand the rules that shape outcomes. Awareness changes positioning. Positioning changes results. The system may be structured, but structure can be understood, and understanding gives you leverage.